Hi, this is Jared from Beyond Accountancy. Welcome back to our YouTube channel. The bulk of this video was recorded prior to the government announcements over the weekend about changes to help debt. When I recorded the video, I talked about the possible changes and what might happen. And just for clarity, I'm going to put a little addendum at the end of this video saying what the changes actually were and what the implications are in terms of your strategy in paying or not paying your help debt in 2024. So stick around to the end, and thanks for watching. If you have a help debt, indexation will be applied soon. Indexation is where the government adds an amount to your debt, very much like interest on a personal loan or a credit card. Indexation is charged on the 1st of June 2024 and is based on inflation, specifically the Consumer Price Index. With other loans, your interest is calculated throughout the year, but help is different. If you clear your debt by the 31st of May, you won't be subject to indexation at all. If you clear a loan 11 months into the year, you still pay interest on those 11 months, but it's not the case with help debts, which makes paying it off in a lump sum just before the indexation date a strategy to consider every year because of the way the interest rates have been. For example, last year, mortgage rates were in the 5%, but the rate of indexation on help debts was over 7, and it was much higher than savings rates, which were around 4.5 at the time. So in 2023, it made a lot of sense to pay help debts early. But what about for 2024? Well, it's hard to say because the rules might be changing. In short, the government is considering two things: moving the date and changing the rate. When I say moving the date, I mean moving the indexation date later in the year. This will close a loophole that currently exists in the system. So let's take someone with a $10,000 help debt. Their salary comes in each month, they lose some tax to the ATO, and $1,000 goes towards their help debt. So you would think that meant that after 10 months, that would be April, the 10th month of the financial year, their debt would be gone. So come indexation in June, they have no help debt, no indexation applies. Except that, no. How it actually works is that $1,000 on your payslip that says help debt also goes to the ATO and they hold on to that. So when it comes to April, the ATO is still holding that money. They haven't applied it to the debt, and this person has paid more than $10,000 towards their help debt, but yet their debt goes up by $700. So why is moving the date useful for someone in that situation? Well, let's go over the basics of how a help debt works. Your debt only changes twice a year. It rises on indexation day, and it drops when you do your tax return. If we move the date later in the year, the help debt will drop before indexation happens. So in our example, the person could lodge their tax return in August, clear their debt, and then by September, when indexation applies, they have no debt, therefore no indexation. That's of course all hypothetical because the date hasn't yet been changed. This is assuming it changes to September. So we're going to change the date and possibly lower the rate. So why is that helpful? Well, broadly speaking, there are two different rates the ATO uses, or the government in general uses, when they're increasing thresholds and rates and things like that. One is the Consumer Price Index, which in layman's terms reflects cost of living, and the other is average weekly ordinary time earnings, which in layman's terms reflects wage growth. So CPI, or cost of living increase, is higher than wage growth. So let's look at last year's situation. As I said, we had consumer price index or inflation was 7, actually 7.1. And you can see that's higher than mortgage rates and higher than savings rates. But wage growth, average wage growth, this time last year was 2.42%. So if they're going to change to that lower rate using last year's numbers, the decision to pay off the debt is obviously much different. So what about 2024? What are the rates looking like now? And should you pay your help debt? Cricket fans will know that when you're running between the wickets, the batsman will tell his partner one of three instructions: yes, no, or wait. So I'm telling you, wait. Wait and see if changes are made in the federal budget, because that could alter your decision. And I'll talk about the timing on that at the end of the video. Secondly, Pay your debt if you have 1 to 2 years left. So 1 to 2 tax returns will clear your debt. Otherwise, put your money somewhere else. Why do I say that? Because rates have moved. So mortgage rates are higher and savings rates are higher. But inflation allegedly has dropped and wage growth is up. But no matter what measure the ATO uses, it's well below mortgage rates for the 2024 year, even if they go to the lower rate or leave it at the higher rate. And I'll add a little caveat to that: pay your debt early. If you have 1 to 2 years left before you're clearing it anyway, and you have no urgent need for the funds, if you've got a big investment coming up or a major purchase, or you're replacing your car, or just the cost of living is so tight you can't afford a lump sum right now, then you'll just have to incur the indexation and live with it. So make sure you know that that money is available and that you're not going to need it back, because paying your HECS in advance is an irreversible decision. And as a side note, when I say put your money somewhere else, don't forget the first home super saver for those on the average income will save 19.5% in tax benefits in the current year. And that's definitely worth considering. There's a big overlap between those who have student loans and those who are trying to get into their first home. And it might be just much more intelligent to utilize the first home saver scheme than to pay down a help debt. As a side note, I'm thinking about doing a video of where my clients are getting the best rates of returns on their cash savings. If you're interested in seeing that video, just put a comment down below. So I find the best way to explain these concepts is real life examples. So I'm going to talk about 3 hypothetical taxpayers: Jesse, Robbie, and Sally. So Jesse is a professional earning about $150,000 and has $13,000 left on her debt. The compulsory help repayment for her would be $14,000, so it's more than the debt. That is, she's going to clear her debt when she does her next tax return. So in her situation, she may as well prepay the debt before indexation occurs. It's going to save her $900. It's pretty much a no-brainer. So when I say pay early or pay before indexation, what do I mean specifically? Well, if the date remains as the 1st of June for indexation, she should prepay it in May. If they do move it forward, then she's got a great opportunity to not have to pay anything and just make sure she gets her 2024 tax return done really early before the new indexation date. So definitely pay. It's just a matter of when. Pay in cash if the date remains. Lodge your tax return as soon as possible if the date moves. Our second taxpayer is Robbie. So Robbie earns $120,000, but has a much larger help debt. He's just returned from a mid-career break with a new degree, but also with a $35,000 debt. So on his current salary, he'll be paying close to $10,000 a year. So realistically, he's 4 tax returns away, and the rules are uncertain and the rates are changing quite dramatically every year. So if I'm in Robbie's shoes, I'm not going to prepay now. I've got other places I can put my money, like in my mortgage offset account, for example, and I'll reevaluate this time next year. However, if the indexation date moves, there's still not an advantage in Robbie prepaying any of his debt, but he should definitely lodge his tax return early. Our third taxpayer is Sally. So Sally has a degree, in fact 2 degrees, but at the moment is working part-time with no plans to work full-time. She still has $35,000 on her debt, but she expects to remain under the threshold due to her part-time income. To see the full table of help repayment thresholds, go to the ATO website and search for the number 16176. But here's an extract of the table. Sally's doesn't expect she'll earn above $51,550 anytime soon, and she's got lots of other places where she could invest $35,000. Given that help debts don't form part of your estate, in other words, the debt dies when you do, so to speak, and there's an outside chance of the government doing a US-style waiver of student loans as a way of buying votes in the future, it makes no sense for Sally to pay anything off her debt. This is particularly true if they're going to start using a lower rate to index the debt. For Sally, as a part-time worker, one of those better places you could invest the money would be to put $1,000 into her super and get the $500 low-income co-contribution. It's a 50% return on her money, and it's money she's going to see again in the future at retirement. So hopefully one of those 3 scenarios matches your situation and can help you to make the right decision on paying your debt. Little side note on late lodgements. I won't go into great detail on this one, but if you have late tax returns, and you're unable to clear your help debt before you catch up on those lodgements, you should lodge all your old returns before the indexation date, which is so basically you want to try and get them all in by the 31st of May, if possible. At least then, when indexation happens, it's being reduced as a result of all those late tax return lodgements. So, what's the message? It's wait, but don't wait too long. So, what do I mean by that? Well, because of the timing of the federal budget announcements, and the timing of when you need to pay your debt, there's actually a window of time where you can wait and see if the rules change, but still have time to pay in May if they don't. So assuming we get some clarity on this on budget night, the window of time looks like this. Federal budget's on the 14th of May. I recommend prepaying at least 3 business days before the end of May. I would do it 10 days before to be safe. So you've got at least a week between the budget announcements and having to make the payment. So those of you who are planning to pay in May, but might now decide to wait a couple of weeks, have the money ready, but don't necessarily pay it immediately until you know what the rules are going to be. We're planning a budget night update, which will release on the morning or the afternoon of the 15th of May, so the Wednesday after, with those changes, which will include any changes to the help debt situation. Please subscribe to our channel. So the government has announced changes to the help debt system, and we talked about there are 2 possible options: moving the date or changing the rate. And this is the announcement that's on their website. So basically the proposal is that the wage price index, so it wasn't AWATI as I thought it was, but it is based on wages. It is a lower amount, so those comments are still valid. But the wage price index is going to be a lower amount. Last year it would have been 3.2 instead of 7.1, and I'll put a link to that announcement in the next slide. But I want to focus on the announcements from the point of view of what can you do about it? What are the strategies? What's changed? So that's the link to the article I just showed on the screen. Indexation would have been 3.2% using the wage growth instead of inflation, and they're going to retrospectively apply the lower rate of 3.2%. So that means you'll receive a credit if you had a help debt and indexation applied to you in June 2024. So therefore, your debt will be reduced. June 2024, it'll drop from 4.7% to 4% under this proposal. And there's no change to the indexation date. So one of the main implications of that is, I mentioned if they move the date after 30 June, that anyone with help debt should lodge their tax return as early as possible. That's no longer true. So you can lodge your tax return anywhere in the lodgement cycle as a help debt holder, and it won't make any difference to how your debt is treated, provided that you're not late on your tax. So for example, for 2024, as long as you lodge before the 31st of May 2025, there's no advantage in lodging any sooner. There's no difference to the date and the timing. You can see from the leaderboard that the wage index, which is the figure that will be used, is lower than CPI, only slightly lower, but it is lower. So it's 4%, which makes it lower than a mortgage, lower than savings, and lower than indexation. And on that logic, unless you're close to paying off your debt, there's no mathematical reason, or doesn't make any sense for you to put money into a help debt that could just be left in your mortgage offset account or in a savings account. Now, the more astute of you might notice that savings before tax is really an irrelevant figure. What are you making in your savings after tax? Well, let's assume that you're in the middle tax bracket and you're paying 32% tax. That would be 3.23%, which means the indexation saving at 4% is actually slightly better than savings, which is true. But given that it's an irreversible decision to pay your help debt, and now we can see there's a political climate where they want to give credits and handouts and reductions to people with help debts, I wouldn't bother paying your debt early. That 0.77% you might save is not enough to justify locking that money away. And don't forget, if you're a first home buyer, the best place to put the funds would be in the First Home Super Saver scheme. Once it's in there, it makes a savings rate of over 6%, so you're winning on the savings rate, but the biggest win you get is the tax break for just putting the money into super. So practically, what's changed in terms of the information in the video? Well, not much really. It still makes sense to prepay if you have less than 2 years left. It still does not make sense to prepay if your debt will run for 2 or more years, unless your bank or mortgage broker advises that, but that's a separate topic. And as the date is still the 1st of June, late May is still the time to make voluntary repayments. So if you have those funds ready, make sure you pay them with plenty of days for the BPay to clear before the end of May. Don't make the mistake of paying on the 31st of May. So I hope you enjoyed this video. Please subscribe to our YouTube channel to be kept up to date with further changes, such as the upcoming federal budget. Thanks for watching, and we'll see you next time. Bye for now.